Well, good morning, everybody. It's May 8th. It's the weekly review where we take a look at what happened and try to, look forward a week or two and see what we think is going to happen. Some more downside, nothing big. The Russell was the one that took the brunt of the action, 1.8% lower. That was, some of the banks coming off. They had huge runs. And, basically this still looks like profit taking to me. I don't see much more into it other than that. If we turn our attention here to the technical summary, let's go through these one at a time. I think there were some key things that happened last week. Apple, for example, was one of them. We saw Apple push down into that 82 area, held, right? So that's a test on lighter volume. You test the swing point low here, you test swing point low there, this one being the important one, right? You get under it, back over it. This thing's going to try to bounce. And if you take and you push it to the daily here, you can see where that bounce is probably going to try and push to. And I would think the bottom of this big bar. Yes, it could get all the way back up here, but more than likely it's the bottom of that bar. It's about 95.5, 95.68 to be exact. And so that looks to be what's happening with Apple. That was a big test and held. I did put some money on in the portfolio. If you're watching that on the LA's room, if you're not familiar with that, if you're a new member, you come down here, LA's room, you can check that out. And matter of fact, just as another note here, sometimes new members don't see this, but when you come to this room, you actually have this chat room, but there's a lot of stuff up underneath here. So just scroll down to get to everything. As far as what else, the indexes all did under overs on lighter volume. Let's just look at a couple of them. You can see the S&P 500 here gets under this prior bars, right? Lighter volume into the swing point low areas, the support zone that was there. So it comes into it, holds, under, over. That's going to try to bounce higher. And that's really going to be the test this week. Where's it going to bounce to? Well, the charts actually give you a good indication that swing point high is high, where you would expect it, right? And if you look at this, what you really had was you had a test of this prior swing point high as it came down. And so that test, actually, let me get the right color on here so we can see it. That test came into this area, and you can see full retest. Now it's going to try to regenerate back to the top side. And that's going to be the real thing to watch this week, is what happens on that regeneration attempt. Does it push up? Does it get back to be swing point highs? Does it fail right here at that high at this red line that you see? That's going to be the next attempt and the next real test. And folks, we don't usually get, I should say not usually, we don't usually get a rollover, right, without some sort of a failed bounce, right? It's the failed bounce that gives you the hint that something bigger is in effect. And so if we come back up to this resistance zone, or even if we get up higher, maybe we come back up here and try to test these swing point highs and fail. That push up that then leads to a failure push down, and the potential break of some swing point lows can lead to the larger move to the downside. And so that, I believe, is what we need to be focused on. So you had the same thing across all of these. You can look at them if you want. The downside targets now, if we look at the S&P 500 again, the downside targets here, if we are going to break back higher, they were almost met, right? We'd originally talked about this 2035, 2040 area as the downside target. It was really this bar is about 2041. And so we got into that area and we basically held that area. And so it really has done what we expected it to do. And when you see that kind of action, right, that's what you want to see. You want to see it pull back. You want to see it come right to where it should. And then you want to see it turn. And so far, that's exactly what it looks like. If we look back over here at the NASDAQ, it's the same sort of thing. The NASDAQ also got back into the targets. Weaker as it was, though, but it did kind of come back into these targets. This big bar was more or less the target, these two bars. And so as the NASDAQ came back into this area, right, and I think we kind of talked about these two bars, that was, you take the highs there, that's about where it came to, right? So, if this market's going to continue down, it's going to actually start breaking some things that it shouldn't break. And then that's going to be symptomatic of something larger. But this has been a pretty good sell-off. I'd be very surprised that we don't get a decent bounce out of it, because that first retrace, as we've talked about, is more likely than not going to be bought. And if I move over here to the weekly, this was a decent retrace back into the swing point high. That was where we talked about, right? You come back into the high of a significant bar, swing point high, and you don't have the volume. And so you're coming in there, you don't have the volume. This is where you should turn, right here. And so that's what we should be looking for, and that's what we should be expecting this week. The other big thing here is the Russell. If we look at the Russell came back to do, now the Russell, remember, had been the strongest one on the way up for the most part. S&P's had a nice run, but the Russell's had a good run. Russell finally gets a decent pullback after this long run off the February lows, right? Gets a decent pullback, but where did it come back to? Well, it came right back to do a full retest, although it wasn't a full retest we expected. It did do a full retest after this long run. Let me get that in there right. Came right underneath it on Thursday, but Friday, lower volume, flips around, hammer reversal. This thing's going to try to regenerate to the top side. And where can it regenerate to? Well, this one can actually go back and test the swing point high. So I would expect this is where we should look for the juice to come from if we're going to see real juice. If we don't see the Russell outperforming on the upside move, that's going to be a hint that something else bigger to the downside potentially is going to be out there. What's the things to worry about now, right? There's always something to worry about. I think the main thing here is the S&P finally printed that swing point low we were talking about right here. And so now if you take and look at where that level is, this was the area that we expected it to retrace to, got to it, right? Now, this level here becomes key. And that price point is 2022.49. If we move this over to the daily and look at it, so 22.49, 2022.49 is this swing point low. That would be a break of multiple swing point lows, multiple time frames. If we see that, we're going to see the push back into that 1993 area, which was, it's probably hard to remember now, but this 1993 area here was the initial retest, regenerate bearish off that big push back up. It got to this area here, kind of stair-stepped down, and then got the reversal, and that was when we knew something larger to the upside was going to take place, because it didn't break down and regenerate lower where it should have. And so that was kind of what it told us, is like, okay, this thing's stronger than we think. We're going to have to try to go with it. And even though I did try to short it here, we actually ended up making a little money on that short. But each of these other shorts, like here, and I believe it was in here I tried again, or maybe it was there, I don't remember exactly. Each of those failed, right? Because this thing was, quote unquote, stronger than we expected and continued up. As we come back, that will be a key area. That will be the next target to the downside if this thing breaks to the downside instead of bouncing to the upside, which is what we expect now. Now, if it does that, it's going to tell us it's weaker than we expect, right? And any subsequent bounce is probably going to get sold, which is just the exact opposite of what we've thought all along, and that is that this should come down. First bounce should be, first retrace should be bought. This is what I expect. If we don't get that, it's telling us something more deeply wrong than what what the picture tells us at this particular point in time. So that, again, we listen to the market. We try to understand what the market's telling us. We draw a thesis based on the technicals and the probabilities that are there, and this should get bought. If it doesn't, something bigger is happening. Now, not only did the S&P print that swing point low, we actually have it on the Russell too. So the two strongest indexes out there now have printed that swing point low. That would be a major problem if they break those. Whether they do it now or they do it later, that's going to be the next setup to the downside if it happens. The big laggards still this year have been the NDX and the NASDAQ. And the big three, right? Apple, we just showed, actually held that swing point low. It's going to try to bounce. If we look over at the other two, Microsoft also getting a bounce here. It's going to try to push back up into this bar, probably to the swing point highs high. And then finally, if we look at Google, Google also getting the bounce. Google's going to try to push back into this bar, probably as high as these swing point lows, or maybe this swing point high over here, this bar. And so I put the numbers in there for you. These are counter trend bounces. Remember, all of these got sold off on earnings. When you see a big sell-off on earnings, yes, you can get a bounce, but you have to expect it's going to come down, and then the test is going to be those lows, right? So whatever these do, however far they bounce, when they retrace next, if they can't hold these lows and they start breaking these out, something much bigger to the downside has to be expected. And if that sets up, this NDX is going to be a huge drag on the rest of the market. So these counter trend bounces right now are going to support the market's bounce, but they're not going to last that long. And when they turn, right, they're going to turn. And actually, I've got these backwards. This is Google. This is Microsoft. And I said, respectively, I have them out of order here. But when that happens, right, when they turn, this whole NDX is going to be a drag again. Now, one trade one could make if they wanted to is you could take the NDX and you could trade it short, and you could trade the S&P long and do a spread trade on them once these reach their targets, right? That would be a decent spread trade if one wanted to make it. So if you want to put money to work, you got money sitting on the sidelines, you don't want to go straight one directional move, you could do a spread trade using the NDX as the weaker one. So I suspect that's going to be what happens. I suspect this is what's going to turn the market back down again. I suspect that's how we're going to see, quote unquote, the failed bounce take place. IBB, if you look at it, now these are the three largest weightings. I put the wrong symbol in. I'll get that fixed. The IBB here, this has been the weakest group, right? Continues to just get pummeled to the downside. This, if you look at it on a weekly chart, it made a decent little run, but still, in the context of things, it just barely got into the swing point lows and immediately regenerated lower. It tells you how weak this group is. This is a large weighting inside the S&P, the NDX. And then the other one, of course, is the SOX. If we look at the SOX itself, right, the SOX, I guess I got to get these symbols fixed for you, sorry. Let's put it in here. The SOX itself, right, had a huge run, right? And when it broke these two swing points, got a nice push down, broke another one, right? Now bearish, as it comes back, the SOX is going to have difficulty, just like the others, right? It's going to have difficulty as it comes back into these areas. This breakdown bar coincides with these swing point lows that were broken. You had volume escalation. This area is going to be the tough area on the way back. And so my suspicion here is that the SOX, the IBB, right, and the big three are going to keep the NASDAQ under wraps and pressure on it as soon as their bounces are done. And that's why I think the NDX, if you want to short something or if you want to do a spread trade, that's the place that you should be looking. The sectors that we saw some huge rotations in relative to the others, industrials, and let me get that chart up, the industrials. So we saw big volume come out of these, breaks the swing point high, right, can't hold. So in other words, this is telling you that this is going to be kind of a dead cat bounce, just like we're looking at on the NDX. And so as this pushes back up, you got these huge volume bars here, these two bars right there. That's going to be where the resistance is on the way up. I in particular have an industrial name in my portfolio. I'm going to want to sell because the sector is not going to support that move, right? Sectors, you want the sectors to support your stocks. That bounce back up is going to have a hard time probably there, and that stock that's in that sector is going to struggle as a result of it. Now compare that to, say, maybe the financials, which actually had a nice move too. Financials haven't even got back into the swing point high. And so you can see the difference between the sectors. Some sectors are going to support this bounce more than others. You want to, if you're going to try to trade the bounce, you're going to want to be in the strong sectors. So financials is one of them, and it's easy to see. Just simply come to the shared watch list that I have for you here. Just come to the watch list. Now, I'm looking at it as myself, so I'll see them up here. You'll see the shared watch list down here at the bottom. They'll be down in this area, shared watch list. My name will be in front of them. And all you have to do is just come here, go to the major sectors right there. And once you get in there, you can just hit this show all charts, pop this up, right? This little symbol control, and then you can just flip through these one at a time, right? And I'll put it down here so you can see it. Just flip through it, click it. It will redraw them, and you can just walk through them one at a time. You can see every one of them. And just look to see, have they came back into their swing point highs? Are they above them or below them? So forth. That will give you an idea of which ones are stronger. Transportation's not a strong one, right? And so forth. So that's the way to do that, and that's what I'd be looking at. If you're looking for trades for this bounce, right, this little bounce that's going to go up, that's where you look. These are going to be small, short-term trades, though, because I expect that when we get that bounce, we're probably going to see it try to roll over again. What else? Dollar. The dollar was a big surprise last week, and so if I pop in here on the dollar actually did not continue to the downside as expected. So this was a break of multiple swing points on multiple time frames. We broke it on the daily, we broke it on the weekly. When you break it, right, usually you should expect 2 to 3 bars. Well, you got that here on the daily, but you didn't get that on the weekly. If I pull the weekly up, you can see that, and the weekly actually bounced back into that low. That's not what it should do. And so even though we left volume down here, this is not the kind of action. So that tells me something is going on with the dollar differently than what was expected. And if that's the case, you can't expect the dollar to continue lower, but instead to try to bounce higher now. And in other words, if I go to the monthly, that big range simply got expanded on the monthly chart rather than totally broken, in my opinion. And so instead of this getting broken, it just got a little bit of an expansion at the bottom of the range, and it's going to try to push back up into that higher range now. And if that's the case, what is that going to do? Well, that's going to hurt everything commodity. All of these are probably going to get hit, or at least they're not going to get supported anymore by a weaker dollar. And so if you're in these sectors or wanting to be in these sectors, you have to pull in your horns a little bit, because more than likely, and these still look strong. If I pull up the gold, for example, this still looks very strong. More than likely, if you pull this back, put it on a monthly, what you're going to see is you're going to see these things, instead of continuing higher, you're going to see them start to put in ranges on the longer term time frames. Where could this range to? I would think this area here. And so we're probably almost to where we're going to go, and then we're going to see some sort of a pullback. So don't get too heavy in these sectors at this particular point in time would be my suggestion. Okay, so general summary here, we got that first pullback. It's probably going to get bought just like we thought all along. But you're going to get the bounce and then the rollover more than likely. The critical zone, like I said last week, are these numbers. If we get a failed bounce, if we get the breakout, right, expect it to push another 200-300 points, because it's got a big range. If we get the downside breakout, we could go all the way 15. And these numbers are longer term. We're talking about multiple months, not weeks or days. If we get that downside, we're going to have to get a failed bounce. That failed bounce, again, is going to be the push back up. Let me get the S&P chart back up here. That failed bounce is going to be a push back up into this area. Let me get it here on the daily so we can see it better. It's going to be a push back up into this area that can't get to new highs. And that, if it happens, is going to set up the larger potential move, which may be the break of the multiple swing points to the downside. To get the roll started, you got to get a failed bounce, right? You got to push up, you got to pull back, you got to push back up, and then bounce and fail. And that's what we have to be watching on this bounce. What's the bottom line? The earnings are pretty much done this week. We did not get anything towards the end of the earnings season to push us higher. In fact, we got most things pushing us lower. And I don't see anything on the horizon. There's not much data over the next couple of weeks. We don't have Fed meetings. That's out in June. We got earnings out in July. There's nothing really to move us right now. So what does that mean to me? That means to me that probably we could see this kind of trading chopping around. And if you go back and you pull up, say, a weekly chart, and let me just bring this one over and make it a weekly and make the S&P 500. Excuse me. Here we go. The thing that we saw back in this range where we chopped around here, I think that chop around could happen again here. And so very much similar to what we saw before. We don't have anything on the horizon probably to break us down. We don't have anything to break us out. We're probably going to chop in this range for a few weeks would be my guess. What's the potential scenarios for the next week? Well, last week it kind of played out like we thought. The best case is this thing just runs higher, prints new highs, right? Just breaks those swing point highs at the top and keep going. Not likely. Worst case, you just break down right away. That's also not likely because we actually have the the under-overs on the dailies. Probably not going to do this yet. Most likely case is to grind back up, right? And then I would expect as we grind back up, right, we're going to start seeing that chop take place. And so, if I had to draw this out, I would think some sort of a grind maybe is this far, maybe a little chop down, maybe a little bit push back up, so forth, right? And this last for a few weeks potentially. So that's kind of the way I'm viewing the markets right now. Fundamentally, there's really not much to move us. The big thing, Fed speakers, are they going to move the dollar higher? I think that's the key thing to watch on a fundamental basis. And so that's pretty much it for this week. I expect us to, flip back and forth a more grind this week, bias probably to the upside. Have a great one. Thanks. See you next time.